We have seen a relief rally in foreign exchange in other currencies. Sara, Eisen is following the action. Sara, we've got some proof that the risk trade back on?
Yeah, your proof is in Aussie-Yen, Australia's dollar versus the Japanese yen. This is the classic high yield, low yield, right? Australia, we know, has the highest interest rates of G10. Japan has the lowest, and it is seen as a barometer for risk, this Aussie-Yen trade, and often tracks the global stock markets. And you see a spike higher, about 1.5% move higher today, and that means risk is back on, and it could be a good sign for global stocks.
And we saw people moving into the Oz today because they had that good economic data.
Yeah, good unemployment data. Jobless number surprise, falling more than expected to 5.3%. On top of that, you have China's inflation, that consumer price index easing. It came in better than expected at 1.5%. Economists were looking for about 2%. So those two numbers altogether factored into the risk trade today. Also encouraged demand, not just for risk, for the high yields. You know, Aussie, I said, has one of the highest returns. It is the ultimate carry trade. And Commerce Bank economists say interest rates in Australia are only going to go up. And that means they're going to target 90 on Aussie dollar. Right now, we're trading at about 88. So another move higher here for Aussie dollar.
Greece, though, a damper on risk at the moment.
Greece still front and center in investors' minds and making investors still jittery. And that's why you see that the euro, dollar, euro, yen, these are all flat. People are nervous to buy the euro right now because they're waiting for some sort of resolution in the whole Greece bailout, in the rescue package for Germany. And that's why you usually see the euro actually rising when there's a return to risk. You see Aussie yen following euro yen, both higher, but you haven't seen that, and that is because of Greece, and it's because of all these concerns. Analysts still expect this to weigh on the euro in the near term. However, if they do come out with some sort of bailout, something that markets can take as a positive sign, that could give some near-term support for the euro, but still plenty of long-term concerns about the euro on this whole debt mess out of Europe.